Fair Isaac Corporation, FICO, is a company famous for its FICO score, which banks and financial institutions use to check a person's creditworthiness. Let's break down its financials in a way that's easy to understand. 1. Market value and stock performance. How big is the company? Market cap, $41.29 billion. This is the total value of the company in the stock market. It tells us how big the company is. Enterprise value, EV, $43.72 billion. This includes the company's debt and cash, giving a clearer picture of its real worth. Since EV is more than market cap, it means FICO has some debt. Shares outstanding, 24.42 million, the number of shares available in the market. Share reduction, minus 1.30% in the last year. The company bought back some of its shares. This is usually good for investors because it increases the value of remaining shares. The stock price has gone up by 32.06% in the last year, which means it has given good returns to investors. Is the stock expensive? To know whether a stock is cheap or expensive, we look at its PE ratio, price to earnings ratio. Current PE ratio, 78.49. This means the stock is trading at 78 times its past year's earnings. A high PE usually means the stock is expensive. Forward PE ratio, 56.00. This means the stock is expected to get cheaper based on future earnings, but it's still high. PEG ratio, 1.74. If this number is above 1, the stock might be overvalued. Since FICO's PEG is 1.74, it is not very cheap. The stock is expensive right now, but investors are willing to pay because they expect good growth in the future. Profitability. Is the company making good money? A good company should make a lot of profit from its business. Let's see how Fair Isaac is doing. Revenue. Total income, $1.78 billion. This is the total money the company made in the last 12 months. Net profit, $544.27 million. This is the actual profit left after all expenses. Earnings per share, EPS, $21.79. If you owned one share, this is how much profit is assigned to you. To check how profitable a company is, we look at its margins. Gross margin, 80.17%. For every $100 the company earns, $80.17 is left after production costs. This is very high. Operating margin, 42.91%. After paying for salaries, rent, and other business costs, the company keeps 42.91% of revenue. Profit margin, 30.66%. After all expenses, 30.66% of the revenue turns into profit. Conclusion. Fair Isaac is a highly profitable company with strong margins, which is a great sign for investors. Investors love companies that generate high returns on their money. Here's how Fair Isaac performs. Return on assets, 28.85%. For every $100 in assets, the company makes $28.85 in profit. Return on invested capital, ROIC, 37.09%. For every $100 invested, the company makes $37.09 in returns. Return on capital employed, ROCE, 55.39%. This shows how well the company uses its capital. Fair Isaac is highly efficient, making good use of its money and assets to generate profits. Is there any risk? A company should have more cash than debt to be financially strong. Let's check Fair Isaac's position, $184.25 million. This is the total cash the company has. Debt, $2.44 billion. This is the total money the company owes. Net cash position, minus $2.26 billion. Since debt is much higher than cash, the company has a negative cash position, meaning it owes more than it has. Conclusion. Fair Isaac is profitable but carries a lot of debt, which is a risk. However, since it generates strong profits, it can manage this debt. Stock volatility and investor sentiment. How risky is it? Beta 1.39. A beta above 1 means the stock is more volatile than the market. Fair Isaac's stock moves up and down more than the average stock. Short interest 2.73%. This means some investors are betting against the stock, but the percentage is not too high. Conclusion: this stock can be risky because of its high volatility, but overall, investor sentiment is positive. Analyst ratings and future expectations. Average price target $2,089.69. Analysts believe the stock can go 23.59% higher from its current price. Consensus rating: buy. Most analysts recommend buying this stock. Conclusion: experts believe Fair Isaac's stock price will continue to increase, making it an attractive investment. Should you buy Fair Isaac Corporation stock? Reasons to buy. 1. Highly profitable, strong margins and earnings. 2. High returns on capital, efficient use of money and assets. 3. Growing stock price, increased by 32% in the last year. 4th, positive analyst ratings, expected 23.59% upside. 5th, industry leader, dominates the credit scoring industry. Reasons to avoid. 1. Expensive valuation, high PE ratio, 78.49. 2. High debt, more debt than cash, minus $2.26 billion. 3. Stock is volatile. Beta of 1.39 means price fluctuations. 4. Short interest exists. 2.73% of shares are shorted. Final verdict: buy or wait. If you want a profitable and fast-growing company, Fair Isaac is a good investment. If you are looking for a cheap stock or a low-risk investment, you might want to wait for a better price. This video is for informational and educational purposes only and should not be considered financial advice. I am not a licensed financial advisor. Investing in the stock market involves risks, and past performance does not guarantee future results. Always do your own research and consult a certified financial professional before making any investment decisions. I am not responsible for any financial gains or losses based on the information shared in this video.